Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, October 1st, 2012, the beginning of a brand new quarter. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. And let's take a look at the week that just took place as we see, looking at the economic announcements in the last week of the second quarter. Actually, that'll be the third quarter. We see that we on Monday had Dallas Fed, and the Dallas Fed didn't give us much to work with, nor did it change much as far as what we were looking at with the market. As we then moved to Tuesday, we saw we had consumer confidence, which came back better than expected, and then we went to new home sales, which were in line in expectations. GDP was downgraded on Thursday. Jobless claims were actually no big effect on the market, so it didn't really make any difference. And then finally, Chicago PMI, consumer sentiment, all those things were sitting there, and so what we saw was that as the week took on, we were not really focused on economic announcements. What we were focused on was Spain, and Spain was the one that actually carried the market again for this year. As we looked at Chicago PMI, it didn't give us exactly what we expected. It gave us a contradictory reading of 49.7, while expectations called for it to be closer to 52.9. So Friday was just like the rest of the week. We just plain did not get what we wanted out of the market. And so ultimately what happened as we went through the week, we saw that Europe actually handled and controlled much of what the market did. As we go into this first week of October, we see that we have PMI manufacturing on Monday morning, ISM manufacturing index, construction spending coming out on Monday. Coming to Tuesday, we have motor vehicle sales and not much else happening the rest of the day. Looking at Wednesday, ADP employment monthly report, ISM non-manufacturing monthly report. Those things certainly have moved the market in the past. Thursday morning we have jobless claims, just like we do every Thursday morning. And then as we go on to Friday, we have the monthly report, what the employment numbers were for the month of September. We also have consumer credit, which probably won't have much effect on the market. So that is the weekly forecast as to what's going to come. Let's take a look at last week's S&P and see if we can shed some information on where we are going. So if we look at the overall market, we see that we are definitely in an uptrend. And if we look at the cycle that we're in, we were much of the week in a down cycle, finally getting that pullback that we talked about. And then on Thursday, we ended up with a pop-up, changing our cycle from a down cycle to an up cycle. All right, let's look at greater detail as to see what it is that we're going to see when we look at it in a little bigger detail and magnify this. Note that we hit the 30-day moving average, bounced off the 30-day moving average, continuing that strong uptrend that we've been in well over the last 4 or 5 months. Now let's take a look at it with a little timer, some oscillating indicators showing us that we've pulled back a little bit with this long-term green line dropping below the 75 percentile mark. And we see that the red is, which is the faster of all the indicators we have there, pointing down with a little bit move up in the blue because of the last couple days of Thursday and Friday. All right, and now here comes the magnifying view. When we look at the magnifying view, we see that we're looking at these 5 days. And when we look at those 5 days, we see that on Thursday we got that bounce up on news out of Spain, and then we saw that we ended up with an inside day on Friday, which means that there was a lack of commitment in the market to keep moving up, not much of a follow through after bouncing off that 30-day moving average. Not exactly showing us strength. What's going to move the market in the next week as we enter into a new earnings session? Well, of course, earnings will move it. By the way, that took care of the last quarter last week. Fourth week after options quadruple witching generally ends up being a lackluster week, and we did see some pullback as we continued through that week. We came down on Monday, Tuesday, Wednesday on some economic announcements that weren't all that exciting, on news out of Spain that wasn't all that exciting, and we saw the market having a difficult time holding on to those gains, and then we did go down, get a technical bounce off that moving average. The interesting part is, as we had this up day on Thursday, it was done on very average volume, and so did not give us that big follow through that the bulls would like to have seen. So when we look at it, we are in an upcycle. An uptrend. As for the long-term trend, we are definitely in an uptrend, have been for about 6 months, and we've just completed a bit of a down cycle. Going back to the moving average, all things return to the mean, and the mean is that moving average. And now we see that on Thursday, we changed our cycle on the pivot where we got higher highs, higher lows, and then Friday had a lack of commitment to the market as we had an inside day and a hesitation on Friday. All right, next let's take a look at the Dow and see what it did. Looking at the 5 days for the last week, we see we have exactly the same type of formation where we went into a down cycle, did not make it to the 30-day moving average, and got our little bounce on Thursday, and we did not have an inside day. The Dow tried to pull back to that 30-day moving average, which is sitting there a little bit over 13,300, and for the day on Friday was down 0.3% from the Thursday close, not showing follow-through from the bounce that we had in the S&P. Next, let's take a look and see what the NASDAQ did during the same time period. And we see for the week, the NASDAQ kind of let us down. We actually went below the 30-day moving average. As we see, the tech index have a little more volatility than the other two markets. Got our bounce up with a nice bounce up on Friday, and going up and giving us a change in cycle. Finally closed above that 30-day moving average, and then again also an inside day on Friday. So what we're looking at is we're looking at the next week in the market. The market forecast would be for us to basically get ready to respond off of the earnings announcements, and we'll see whether we still continue to make moves based upon what we see coming out of Europe. And so now let's take a look at the Russell, which generally can help lead us, give us an idea of what's coming. And sometimes will give us a message the day before. And looking at the Russell, we see it also came down to that 30-day moving average. And look at that. It showed us ahead of time that the rest of the market was coming down, showed us with a great deal of vigor, hit that 30-day moving average, and again on Thursday and Friday gave us that change in cycle off of the pivot, and then gave us a what we would call an inside day on Friday, and did not really try very hard to get above the Thursday's high or Thursday's low, as the Russell also followed the overall market down 6 points on Friday for a 0.7% decline out of the Russell 2000. Looking at our indexes for the week, looking at the Dow, the NASDAQ, the S&P 500, and the Russell in that order, we see that the change for the week was all in negative numbers, and we see that for the week we had the Dow down about 1%, we had the NASDAQ down about 2%, we had the S&P down 1.3%, and the Russell, of course, giving us the biggest numbers with down 2% with the most volatility coming out of the Russell. But if we look at the yearly, all of the percentage returns for the year, instead of our pullback to that moving average, show us to be in good, solid, double-digit positive numbers. So the real question is, are we going to have a pullback as we go into the presidential election? Are we going to expect a bit of a pullback before we begin that fourth quarter run? And right now we are headed into what should be the two strongest quarters of the year as we go into the fourth quarter of 2012, the first quarter of 2013. These are the quarters that generally we see as the two strongest quarters of the entire year. So with that thought in mind, let's go ahead and look at the VIX, and we see that the VIX did exactly what we expected it to do. As the market went down, the VIX went up. As the market went the opposite way, the opposite happened with the VIX. So it is a contrary indicator as far as the direction of its move. But notice even when it hit its high, it only got up to about 17. Has been spending a good deal of time recently in the last couple of months below what we would consider to be the normal movements in the VIX, and therefore the lack of not only volatility in the market, but a lack of option premium for those of you that are option traders. All right, with that, that's the way the VIX looks right now, sitting right at about 15, which is low for the VIX. And we see that if we look at a longer term chart, it's spent a good the last 3 months, the entire summer, with a really low volatility. We haven't had a spike above average numbers since back in May. So we see that looking at that 6-month chart, the VIX has been very low, giving us lower lows on these spikes, and just not a lot of fear in the market as the market just moves forward toward election, waiting to see what Europe does, what Asia does, what China does based on its slowdown in productivity as the worldwide recession continues. The bond market continues to pull back, and now at the high of its range, as we see that the bond market has been trading within a downward trending channel, and so we'll see. We might watch that bond market. We're looking at TLT, the EDF for bonds, and we may see if the market starts to pop a little bit, another inverse indicator. We may see those bonds go up if the market goes down, and go down if the market goes up. So watch for an entry on TLT as we see what the overall market does going into earnings. Not great expectations for earnings for the third quarter, so we'll see how they come in and what the predictions were and how the market handles that. Looking at XLF, we saw that the XLF popped up on Friday, did not continue to stay up, and notice that as we look at this area of the XLF, we did not get an inside day out of the financials ETF. What we did get was it leading the market down and being part of the reason why we got a pullback in our major indices. Finally, let's take a look at oil. See that oil's kind of consolidating, has sold off from its previous highs. Looking at USO, which is our one of our indicators for where oil's going. It's an ETF that one can trade. You can use options on it. It is optionable. And we saw that it was pretty much flat for the day on Friday and didn't really give us any big moves as we're sitting there right around this 34 level, waiting for the market to move one way or the other as we see oil just kind of flattening out, and we'll see where it goes if it moves one way or the other. Next, taking a look at gold, we see that gold, there seems to be a flight to safety as gold is sitting at highs for the past 3 months, and we see that as we look at gold, we see that for the day it was down just a slight amount, around 0.4% in the RGLD, which is our ETF for gold. And so we can look for either a breakout or a breakdown. If it breaks down, we can expect it to pull back to at least the moving average, as we see gold since about August 15th head in only one direction, and that is just keep chugging along to the upside as we get bull flag after bull flag. In looking at the volume, we see that as we looked at our volume, here was our Thursday move in the SPY, and notice that the volume was only average volume. Therefore, the lack of follow through as the battle took place on Friday, a little higher volume on the battle, but when it was all said and done, it didn't move all that much, but it certainly is trading above that 30-day moving average. With the ETF SPY mimicking the SPX, which is exactly what it's supposed to do. So with that thought in mind, for those of you that are gold members, stick around and we'll go through our stocks to watch. And for those of you that would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. And with that thought, thank you for being here. This is Butch Shorak, Options University. It's Monday, October 1st, the beginning of a brand new quarter. Remember, earnings starts with what many call the first meaningful earnings report of Alcoa, not this week, but next week. So sometimes this is a week that gets some adjustments in the market as we prepare for those earnings. So be a little leery. Understand, in order to be a successful trader, you have to know where your stops are, what you're going to do if it does hit your stops. And with that thought, thank you for being here. Butch Shorak, Options University. Welcome back, gold members. Let's take a look at the S&P as it currently is sitting, bouncing off of that 30-day moving average. We see that we are now into an upcycle. What can we expect for the week to come? If we don't have a pullback in anticipation of earnings, technically what we should be looking at is we should be looking at another bounce heading up and heading up towards that diagonal trend line that we've put in, and with the overall a target of first that trend line and then this prior level up here at 1474.50. So that's where we should be heading in the coming week. Now, the key is we've got to break above this Thursday candlestick. So keep an eye on that Thursday candlestick. A break one way or the other is going to give you your next indication of where you're going. If we break below that 30-day moving average, you can expect we're going to go somewhere between 1420 and 1400, preparing for some earnings disappointments, which we're not actually looking at some great expectations for earnings for this quarter. So we'll see what happens and how the earnings forecasting with the worldwide recession, if we see a pullback in expectations by our CEOs from our multiple companies. And this is kind of what I expect. We've had a good run. However, this market, you can't fight the Fed, and you can expect that just because of that alone, we may run into the end of the year bullishly working our way up as they put money back into the market. So with that thought, let's go ahead and take a look at Amazon. We see Amazon pulled back with the overall market, hit the 30-day moving average, gave us a buy signal on Thursday with a higher high, higher low, gave us a inside day like the overall market on Friday, and so you've still got time to get into this with a overall target up above of about 6-7 points away. And if the market does continue up, you can expect Amazon is going to participate in that market run, as Amazon is one of the bullish stocks out there. Next, let's take a look at Apple, see what Apple did during the past week. And we saw there was some disappointment in Apple as we looked at this week. And that disappointment was they only sold 5 million new i5 phones. So they were some that were expecting 10 million. So we had a slight pullback. Look for a breakout one way or the other. This is one of the most bullish stocks in the market, and we are running toward earnings, and we see that the next earnings will be late in the month in October. So don't be surprised to see earnings run out of Apple as Apple's showing its stuff. Next, let's take a look at AutoZone. AutoZone, we see, is not the stock that it once was, although it already had earnings. And earnings were well received. We saw it move up with volume. And so If the market does continue on up, we could expect AutoZone to head up towards that 390 level. So bullish on AutoZone, headed for previous highs. CMG pulled back to that 30-day moving average after having a nice run in September. And we can look if the market pulls up for this also to be one of our bullish stocks, staying above that 30-day moving average, heading up with a target of around 350. Use your favorite bullish strategy to get you into CMG as you get your buy signals. Be responsible, don't overtrade, and it certainly looks like one of our bullish stocks out there. Next, let's take a look at Google. Can you say run? Run, run. Going into earnings coming up around the 20th somewhere in October, and we certainly are headed for that 775 area. All right, Google, stock to watch as it is only known one direction. And there's Green Mountain Coffee. Pullback prior to the market pulling back. Hard to call this one. We are sitting on support, so if you do get a buy signal, you may have the ability to make some money to the upside on Green Mountain Coffee. Always a problem. Once the stock loses confidence and the market loses confidence in that company, it's always hard. It gives it a little more volatility, as there were some problems with the CEO and running that company. ISRG had a nice little bounce off the bottom, pulling back now below the 30-day moving average in a what you might call a sideways trend, trading within that range, and see if we get a little earnings run out of this. Market pops up, you could expect this to head up toward that 520 prior to earnings. All right, let's next take a look at MasterCard. Ran with the Bernanke announcement, one of those companies that can take advantage of more money in the economy, and we see that we bounced out of our old trading zone and now have a new trading zone that we're talking about the same distance from there to there as there is from there to there. So that is our new trading zone, and so we see we got a buy signal out of this also on Thursday. If the market does continue up, could be one of your bullish stocks to watch. MasterCard. McDonald's. News. Only thing that causes something like that. So McDonald's didn't have great news coming out. Hit that moving average and bounced off it, but not quite sure where McDonald's is going from this point forward. We do have a hanging man there, and so if you get confirmation of the upside, the expectations would be to go back to that 94 level. We have to wait and see what McDonald's does relative to Friday's candlestick, technically. Nike had earnings, not impressed. A little bit mixed signals, big volume, up day. That's all good. But lower highs, lower lows, and a down cycle. Kind of mixed signals out of Nike, as Nike hasn't been able to do it for a couple quarters now. And looking at Priceline, we see Priceline ran up, didn't quite pull back to the 30-day moving average. This is one where you can expect that if the market does move up, Priceline should continue up again, trying to close that gap, which is way up there. So it's got a ways to go for Priceline to return. And what will it take for it to make all new highs? Probably some good news out of Europe with regards to their recessionary fight that's going on and their banking issues that's going on. Priceline, one of those worldwide companies that needs the world to be clicking to run to its true potential. And finally, WW Grainger, trading near the top of its range. Interesting stock in that it seems to be trading well within its comfort range and has not broken up into new highs. So it's a stock where it's basically going sideways. So pick a strategy that you make on a stock that doesn't go very fast, but certainly has shown good strength since last earnings, coming into new earnings very shortly in the next week or so. So remember, we do not hold through earnings unless we want to take on added risk. All right, so with that thought, this is Butch Shorrock, Options University, Monday, October 1st, 2012, the week before earnings actually begin in earnest. And with that thought, we many times may see an adjustment on this week. So be prepared if your trade does go against you, and have a great week. We will see you on Friday morning. Butch Shorrock, October 1st, 2012.